Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 7th of April. Starting off with the stock 88 Energy, where it probably feels like people have been thrown out of an aeroplane in terms of the price action so far this week. We see the shares bounce off that mid-March support at 0.9 pence and also the 50-day moving average 0.92. If you're looking for a technical buy signal apart from the rebound off the 50-day line, an end-of-day close back above yesterday's high at 1.65, i.e. the bottom of the gap, would be a decent start. At that point, then we'd be looking forward, hopefully, to some kind of retest of the second gap there towards 2.5 or maybe 3 pence as a longer target. But early days yet. At this stage, I suppose we're lucky just to get back up to the top of that gap there from the end of last month at 1.85. So 1.85, the initial target, then after that, possibly 2.5 to 3 pence. But still looking as though this is a stock in emergency mode. Another stock which has been rather difficult to say the least over the recent past has been Bahamas Petroleum. Here we've got a situation where there's a possibility of a falling wedge breakout. That resistance line there around the 0.55 pence level, so an end of the day close above that could be the signal that we're on our way for at least an intermediate rally towards probably the 50-day moving average area at 0.83. That ties in with resistance on the way down at 0.8 from February. And the other plus point at the moment, which is not quite so easy to see, but maybe more easy to see now, is the bullish divergence that we've got in the RSI window, i.e. lower lows for the shares since the start of February, but actually the uptrend line there in the oscillator window. So that could power the stock to a decent rebound. The best case scenario probably at this stage would be at the top of that broadening triangle that I've just completed at 1.1 pence, and that could be seen as soon as the end of next month. But everything here really depending on decent end of day close above 0.55 pence. A situation not quite so fraught, but in the same kind of sector, global petroleum. Here we had the rather vicious pullback there from the January peak, so I suppose that was rather painful. The current situation is that we've broken out of this falling wedge, falling triangle that we've got there at 0.6 pence, so above that, looking towards the 200-day moving average area at 0.97. That would also retest the March resistance at 0.98 or that kind of area. And I suppose the other final plus here is that we've got a dead cross there between the 50 and 200-day moving averages, but the shares have actually risen against that, so that is a plus point indeed. Moving along to HE1, which is Helium One, which I see is certainly going out and about in terms of promoting itself at the moment. Here we had the first inkling that the shares were on the move at the end of last month. I think I highlighted that. We had a false break, I suppose, through 8.5 pence just to keep people on their toes. Otherwise, it would have been rather too easy. Current situation, though, we're heading towards the target that we had while we're above 7 pence, i.e. up to 12 or 13 pence. The reason for the update today, though, is that it would appear that we'll not only get 12 to 13 pence here, but we could actually get that December resistance line projection heading up towards 18 pence as soon as the end of next month. The upside valid while we hold above the initial resistance for the shares, 8.9 pence we had there in December. So above 8.9, looking for 18 pence as a best case scenario target at the moment for Helium One. A stock which looks absolutely fantastic on its daily chart at the moment and has done for quite some time. Kazera Global. The reason for saying that is that we had the unfilled gap to the upside in the middle of last month, and basically buying on the day after that, or even on the day I suppose, but on the day after that around 1.6 pence, you'd have had a decent ride. So far up to 2.1 pence. Our initial target up to 2.6 pence at the top of a rising trend channel from back in September 2019. But the reason we're including the shares today again is that Kazera looks like it'll head towards 3.5 pence as soon as the end of next month, which is a steep November rising trend channel. The upside certainly valid while we hold above that mid-March peak at 1.95 pence, so above 1.5 heading hopefully quite directly towards 3.5 pence for Kazera Global. Moving along to a stock which people have been willing higher for weeks and perhaps months, getting very excited about the forthcoming Mast IPO for Kibo. And here we've got a situation where I suppose that the heavy lifting was done with a break of 0.4 pence, which was the March resistance or initial March resistance there. Above that, it should be relatively straightforward to head up towards the top of the rising trend channel from August, currently promising a target as high as 0.8 pence. And that could be as soon as the end of next month, as we've spent months or even years consolidating around 0.3, 0.4 pence. One would expect now with the log jam breaking that the shares will start accelerating to the upside. At this stage, only really back below the 50-day line, currently at 0.36, really delaying the upside scenario. Another stock which seems to be a favourite at the moment, which people are willing higher, is Kodal. I suppose in a way it's quite a similar chart in a way to Kibo, in the sense that the difficult part here was to break back above 0.14. We've done that, and above 0.14 looking towards 0.24 by the end of next month, which is the top of a rising trend channel from last summer. And really only back below, I suppose, 0.12 and that December-January peak there, really delaying the upside scenario. But one would expect 0.4 to hold and give us 0.24 for Kodal. A stock which I appreciated the comments of someone on Twitter who said that in the case of Cadence, there wasn't much interest when the shares were 8, 9, 10 pence, but now everybody seems to be interested at 30 pence, which is clearly the way of the markets. Initial target here, 32 pence, but we had targets at 10, 15, 20 pence before, but the latest target here, 32, 33 pence at that September resistance line. The next one up after that for the end of next month would be 44 pence at a July 2020 resistance line projection. Upside currently valid while we hold above yesterday's low at 24 pence, above 24, looking to 44 for Cadence. A less high-profile stock is next, and it takes the form of mining minerals and metals. Here we're just breaking or broken the 200-day moving average at 5.77 pence, and a decent close above that today and a weekly close above that on Friday should be enough to give the shares a decent chance of heading up towards the top of that rising trend channel from December as high as 18 pence by the end of next month. Stop loss clearly back below 4 pence after the March bear trap that we had for the stock. Nice MACD buy signal as well that we had at the turn of the month. So things looking, although it's not a very liquid stock, things looking quite bright for Triple M at the moment. On to another stock which is in rehabilitation mode, Petrel Resources. Here you can see that we've broken this extended falling wedge triangle there from May last year, and the 50-day moving average at 2 3/4 pence above the 50-day line, looking for at least the 200-day moving average at 3.68 pence. And in fact, the big picture target here over the next 2 to 3 months as high as 9 pence, which seems rather wild in terms of being ambitious, but we've got this extended bullish divergence line in the RSI window, and that should hopefully give this stock decent momentum to the upside. Interesting to see Sound Energy also rehabilitating itself. It's been a torrid few months and years for the shares, but it looks like a massive sort of U-shaped or saucer-shaped reversal for the stock. The big win so far this week has been the break, the early April break of March resistance at 2.1 pence. Above that, looking towards a target as high as 8 or even 9 pence for Sound Energy. Again, another ambitious sounding target, but again, we have bullish divergence, extended bullish divergence in the RSI window. And after such an extended consolidation and base building over the last, year and more, one would expect the logjam to clear and to get 8 or 9 pence over the next 2 to 3 months. A stock which is probably the most obscure stock of the day, VR Education. Here we've got a break of this falling wedge and the 50-day moving average at 12 pence. Initial target here up to 15 or 16, which is post-December resistance. Big target here over the next 3 to 4 months as high as 26, 27 pence at the top of a broadening triangle from October. Couple of stocks to go now. One, which is perhaps a personal favourite at the moment, is Webis, just because I think it's got a lot of naysayers attached. But the setup here with that gap through the 50-day moving average, unfilled gap through the 50-day moving average in February, is of the highest grade. And the second event here was to break the 3.5 pence resistance zone, post-June resistance zone, which the shares did relatively cleanly. And now we're in a rising trend channel based at 5 pence with that March support line, and looking for 9 pence at the top of the February price channel. After that, if you like the stock, 14 pence perhaps by the end of next month. Punchy call, but let's see if the shares can do that. The upside valid at least while we hold above the 5 pence area on Webis. Finishing off with a stock which has been one of the more painful consolidations that we've seen. Here we've had Westminster Group with that horrible gap to the downside in December, full storm break in January, which didn't help anyone, and also another full storm move in March. So current situation, though, I suppose, given the history of the shares, you'd want to leave it to an end of day close perhaps above 5 pence, or at least 4 3/4 pence, which is recent resistance. Above 4 3/4 pence, then we could head towards the 200-day moving average at 6 pence. But I think the lesson with Westminster Group is that one would want to be late to the party rather than too early, given that you could be sitting on dead money for months if you get it wrong. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.